In this video, I'm going to show you how the net new highs and new lows can give you better trade entries compared to using price alone. In fact, I'm going to show you two trading strategies. I'm going to show you how you can analyze them. I'm going to show you the results, and I'm going to show you how you can do it yourself. My name is Mark from tradingform.com. I have backtested, developed and analyzed hundreds of trading strategies. I have helped traders all around the world to improve their trading with better analysis. In this video, I'm going to show you two different trading strategies that use the new highs and new lows, and I'm going to show you exactly how you can do this analysis. If you enjoy this video, don't forget to hit the like button. And if you want more information about analyzing the financial markets, backtesting, in particular using Excel to improve your trading, please subscribe to this channel. On the screen at the moment is an Excel-based TradingForm backtest model. Now, this is a way that you can backtest all sorts of different trading strategies, different markets and different time frames. It's very easy to use. I do all my backtesting in Excel, and it's a great platform, a great way to analyze, develop and test trading strategies. If you want more information about TradingForm backtest models, there is a link on the screen and below this video. So I am testing on the SPY, the SPY ETF, and I'm also using new highs and new lows. So I'm going to click in here. This is the backtest page, and I'm going to show you exactly the strategy that I am testing. You can do this, you can replicate this in any version of Excel. So the strategy is a moving average crossover. So price is crossing over moving average. So I'm using a simple moving average of the price. So when the close price is greater than the simple moving average, then we enter. Rather, it crosses over the simple moving average, then we enter. But there is a filter. And this filter is the net new highs and new lows. Now this, I'm using another simple moving average. This value must be greater than 0. So this is our filter. So we have two key conditions, both indicating strength, and they both need to give us a green light before we can trade. Let's look at how I've set up the strategy. So I'm using profit target and a trailing stop in this strategy. In fact, these are my two key ways of closing the trades. Now, I'm using percentage-based mode. So this is something that I've tested many times before, and I've found that particularly for the SPY, percentage-based profit targets and stop losses usually work well. So I'm using, you can see here, I've got this button here checked, showing true, and which means that this here is 15%. So a profit target of 15%, which is a nice move on the SPY. Now, trading the stop loss is set to a large value because the trailing stop is active. Now, here are the simple moving averages. First of these on the price. Set it here to 15. Now you can update this, and as you can see over here on the right hand side, the results and the capital graph update in real time as I change these values. Now you don't have to scroll through each of them manually. You can use the optimizer, which is not just a way of optimizing a strategy, it's a way of finding more about your strategy. It's a discovery process. So I'm going to test the SMA on the price entry level. You see that from the drop down menu, and I'm going to click optimize. Now it's going to go through all the values in turn, and we can have a look at the results. Now here are the results. You can see in a nice easy to read traffic light system. Red is the lower values, orange and the greens and the darker greens. You can see we've got quite a smooth transition here, which is encouraging. Shows you we've got some stability at this end. Now, of course, we can optimize further and have a look further on here, but I think we've demonstrated how it works. So I had it here at 15. If we want to optimize for a higher net profit, we could try 20. So come back here, put in a value of 20, and you can see it reflected in the results. Now, the SMA on the new highs and new lows. This is a way to, the new highs and new lows is quite jumpy. If you look at it on a chart, you can see it moving up and down very quickly. This is a way of smoothing that out, but relatively small amount of smoothing, just 4 periods. So we can have a look at that, and let's do that very quickly now. So set an initial value of 1. So a value of 1, as I'm sure you realize, is just the underlying information. A value of 2 would be an average of 2 periods. There we go. We can see a value of 4 produces the best results in this very small test. But you can see also how quickly that was to do. So we're switching into 4 here. We've got one other exit condition that is active here. Now I can switch that on and off. It's making a small difference. And what that means is that if the new highs and new lows drops below 75, in other words, we're getting to not bearish conditions, but fairly negative sentiment, then we exit the trade. Now I said I'm going to look at another strategy, and I'm going to show you how easy it is to change this strategy, testing one thing to a completely different one. Now, so you can recreate this yourself in Excel. I'm going to go through this fairly quickly, but first of all, I'm going to show you why I am doing it. So I'm going to insert a new column here. I'm going to put in a function that calculates the sum of the current net new highs and new lows plus the previous values. And this is cumulative. And I'm going to copy this down by right clicking to all the cells below. So cumulative, new highs and new lows. Okay, so now when I highlight all of this, put it into a chart, you can see we've got a pretty interesting pattern there, worth having a look at further, I think. So why don't we compare it to the price? So I'm going to call that SPY, and I'm going to get the value all the way down to the final row, 5492. Okay, and to make this a bit more useful, a bit more legible, put it over on the secondary axis. So we have here in red, and I'm going to put it on a new page to make it a bit more visible. So you can see I've literally just done this now, and you can see we've got the price over the past 2 decades, financial crisis, recovery since 2008, 2009. There we have the COVID crash up until October of 2021. Now you can see this tracks pretty nicely and gives us some useful information as well. In fact, it's an alternative to price. So we've got more information. We've got different source of information to just using price. Now we don't need that anymore. So I'm going to use cumulative new highs and new lows. I'm going to insert another column. I'm going to call it EMA. And if you like to calculate the EMA, it is super easy to do. First of all, you need your EMA factor. I'm going to calculate it over 5 bars. We need an average to begin with. That's because the EMA always is based on the previous value. So we need to give it a previous value, put in our parentheses, we multiply that by our factor, and we add the previous value. Copy that down. So there we have an EMA. So the EMA here is a signal line. So we're going to have a new entry condition based on that. Now, this is our previous strategy. I'm going through this quickly, but it is very easy to understand. So, cumulative new highs and new lows must be greater than the signal line. Previous value must be lower than the signal line. Okay, so once again we have a crossover. Okay, gone back to the results, so we can see the results here. So we're not using price at all here. We're just using that cumulative data that we just a moment ago looked at on the chart. So we can use it with the profit target, trading stop, or we could take those off. I'm going to do something else slightly different. I'm going to include a new exit condition. Again, this might look complicated, but it really isn't. This time, I'm going to say whenever our cumulative new highs and new lows drops below its EMA signal line, then we exit. Okay, so there we go. And let's bring this value over here. So we're creating this moment by moment. It's really easy to do. So I'm just going to call out EMA, and I'm going to make it into a table so it looks nice. You can see once again, we can update the values in real time, see how it changes the strategy. One thing I noticed for a lot of these values is the MAR ratio above 1, which is a really nice thing to have. So we're getting good entries with this, we're getting a good number of winning trades as well. Good MAR ratio, nice net profit over time, good compound annual growth rates as well. I hope you enjoyed this video. I really enjoyed recording it. Let me know in the comments what you think about it, what you would like me to test next. And if you want more information about backtesting, about trading the financial market, please go to tradeinformed.com.